Here's a summary of Nike's fiscal 2025 fourth quarter earnings call, suitable for reading aloud. Nike Incorporated fiscal 2025 fourth quarter earnings call summary. Good afternoon, everyone. Today, we're discussing Nike's financial results for the fourth quarter and fiscal year 2025. Leading the call are Paul Trussell, VP of Corporate Finance and Treasurer, Nike President and CEO Elliott Hill, and CFO Matt Friend. Key financial metrics: Q4 FY25 versus prior year revenue, down 11% on a currency-neutral basis. Nike Direct, down 14%, with Nike Digital declining 26% and Nike Stores increasing 2%. Wholesale, down 9%. Gross margin, declined 440 basis points to 40.3%, impacted by higher wholesale and factory store discounts, supply chain cost deleverage, and channel mix. SG&A, up 1%, primarily due to a 15% increase in demand creation investment, offset by a 3% decrease in operating overhead. Earnings per share, EPS 14 cents. Full year FY25 highlights: revenue, down 9% on a currency-neutral basis. Diluted EPS, $2.16. Inventory, flat year-over-year and down 1% sequentially, showing progress towards a healthy and clean position by the first half of fiscal year 2026. CEO Elliott Hill's key statements. Elliott Hill acknowledged that the reported results are not up to the Nike standard. He emphasized that the Win Now actions implemented over the last 8 months are beginning to have an impact, with expectations for business results to improve. Repositioning the business. Hill highlighted a significant transformation, starting with a clear declaration to employees: Nike is a sport and growth company, with the athlete at its center. This has involved a sharp focus on 5 key actions: culture, product, marketing, marketplace, and ground game, with an emphasis on 5 key sports, 3 key countries, and 5 key cities. Product portfolio rebalancing. Progress has been made in rebalancing sportswear and performance products. Running saw high single-digit growth, led by the Vomero 18 franchise. Women's basketball expanded over 50% this fiscal year, with Aya Wilson's signature collection selling out rapidly. While acknowledging a ways to go in diversifying sportswear at scale, he expressed satisfaction with the team's progress. Marketplace strategy. Nike is working towards a less promotional marketplace, gaining confidence with wholesale partners. They are strategically adding distribution points and aiming for Nike Direct to be a more premium destination, especially when tied to sport moments and key product launches. Sport offense realignment. A significant strategic shift is underway, organizing dedicated cross-functional teams by sport. This aims for deeper athlete relationships, sport-specific innovation, inspiring storytelling, and differentiation. Nike, Jordan, and Converse brands will now be organized by sport, not by gender or age group, to create greater distinction and accelerate growth. Geographic performance. Momentum and confidence are building in North America and EMEA. APLA's progress varies by country, and China will take longer due to its unique market characteristics, though teams are trending in the right direction. Fiscal year 2026 outlook. Hill sees a clear path to recovery, with continued momentum expected in Nike performance products. He anticipates a strong pipeline of innovative products and a balanced portfolio offsetting declines in classic franchises. The holiday order book is improving sequentially. CFO Matt Friend's key statements. Matt Friend echoed that while results were in line with expectations, the company is not pleased with the financial performance. He confirmed that the fourth quarter reflected the largest financial impact from our Win Now actions, and expects headwinds to revenue and gross margin to moderate. Tariffs. Nike is taking actions to mitigate the impact of newly issued tariffs, estimated at approximately $1 billion incremental cost. These include optimizing the sourcing mix, reallocating production away from China, partnering with suppliers and retailers, and implementing surgical price increases in the U.S. The estimated impact to gross margin for fiscal year 2026 is 75 basis points, with a greater impact in the first half. Fiscal year 2026 insights: headwinds from classic franchises. Headwinds from managing down classic footwear franchises are expected to continue through the first half of fiscal year 26, with accelerated declines in Q4, over 30%. Inventory liquidation. Nike will continue liquidating excess inventory through value stores and select partners in the first half of FY26. A modest revenue headwind is expected in the second half as they lap aggressive clearance activity. Nike Digital. Digital traffic is expected to be down double digits in fiscal 26 as Nike Digital is repositioned as a full-price model. Wholesale momentum. Encouraging signals are seen in the marketplace with wholesale partners, with the holiday order book up year over year. SG&A. Expected to grow low single digits in fiscal 26 due to investments in demand creation and sport offense. First quarter fiscal 2026 guidance. Revenue. Expected to be down mid-single digits. Gross margins. Expected to be down approximately 350 to 425 basis points, including a 100 basis point negative impact from new tariffs. SG&A dollars. Expected to be up low single digits. Tax rate. Expected to be 19% to 20% for the full year. Significant risk factors. Geopolitical volatility and tariff uncertainty, explicitly mentioned as ongoing challenges. Execution of Win Now actions. The success of these strategic shifts is critical for future growth. Consumer spending. While not detailed, implied in the outlook and uncertainty. Competitive landscape. Nike is actively fighting in every sport with different competitors. Highlights. Sport offense realignment. A clear strategic direction to drive sport-specific innovation and brand differentiation. Strong athlete relationships. Continued showcase of prominent athletes in major sporting events. Progress in running. High single-digit growth led by successful product launches like Vomero 18. Women's business growth. Significant expansion in women's basketball and strong performance of Aya Wilson's collection. Wholesale partner confidence. Improving order books and positive feedback from partners indicate a cleaner marketplace. Inventory management. Significant progress made in cleaning up inventory, with a goal of a healthy and clean marketplace by mid-FY26. Lowlights. Overall financial performance. Revenue and EPS declined year over year, not meeting Nike's standard. Gross margin pressure. Significant decline in gross margin due to various factors, including discounts and supply chain costs. Nike Digital decline. Continued decrease in Nike Digital revenue, reflecting a strategic shift to a full-price model. China market recovery. Expected to take longer due to unique market characteristics. Tariff impact. A significant $1 billion cost headwind estimated due to new tariffs, impacting margins. In conclusion, Nike is undertaking a substantial repositioning of its business through its Win Now actions and the new Sport Offense strategy. While the current financial results reflect the costs of these transformations and external headwinds like tariffs, management expresses confidence in a path to sustainable, profitable growth, driven by innovation, a rebalanced product portfolio, and a strengthened marketplace.